Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 25th of February. Now, war has entered Europe for the first time really since World War II now, as Russians have invaded Ukraine in what must be an incredibly frightening experience for the Ukrainian people. But my job is to talk about financial markets and the implications for them. Subsequently, we have seen a lot of volatility, flight to safety across asset classes. We've seen gold spiking higher, the dollar strengthening, yen strengthening, equity markets sharply lower. There is a degree of bounce back that we are seeing this morning. We've seen equity markets rebounding a little bit. The dollar has come off its highs, and it'll be interesting to see how long that lasts, really. Dead cat bounce is obviously the term that you'll be probably hearing a lot about, whether that is anything that turns into a more serious recovery on these equities at the moment. Now, in terms of financial data, we've got today the core PCE, which is the US inflation number that the Fed is looking at, but also looking for the revision to the Michigan sentiment data. It's unlikely that those two will make too much of a headway in terms of how markets are playing, because the volatility around the Ukrainian geopolitical situation is still significant. So the markets that we're looking out for today, I'm looking at the impact that we've had through euro-dollar. We've had euro-dollar spiking lower on the dollar strength, but it's found a degree of support at the what is essentially the range support. Looking also at the gold price, which has been really volatile, incredible volatility, spiking higher, then back lower. Looking at how that is now starting to settle down to a degree. But also the oil price, again, another spike higher, another spike lower, but again, a market that is starting to find support and moving higher once more. So let's have a look. So onto the Infinox MT5 platform, starting off with euro-dollar, which I've got a fairly longer term chart here, and what we can see is that euro-dollar has been trading in this range really since the middle of November, and it spiked to the bottom of that range and rebounded yesterday. So essentially that range is still intact, I suppose you could say, at 11.08. I think the reaction low was yesterday before a rebound as the market moved towards the end of the session. Just zooming in slightly here, you can see that that rebound is still taking hold. Looking at the 4-hour chart, well, the 4-hour chart is still rebounding, but again, is it starting to stall already? I mean, essentially, this is a rebound within a bear phase still of the last, well, few weeks really on the euro-dollar, falling away since the geopolitical risk has really started to take hold. And it really is still a downside move. I'm still sort of looking at euro-dollar or the euro specifically as probably an underperformer through this phase of trading with the conflict and the euro's connection to Russia. So subsequently, I think that we can still see that some downside risk is still there. We've got a technical rally that's coming through. Maybe you've got the resistance that starts to come in around the 1210 mark. But the main resistance starts to come in around the 1270 to 1280 area. That is your resistance overhead for a rebound to really get through. You could draw a downtrend and start to have that into play as well. So that's something to keep an eye on. But really, the euro-dollar is now under downside pressure and falling away. Selling into strength is likely to be seen. Gold chart, well, I'll put it onto the weekly to show you the degree of the move that we saw yesterday. That was one day. We saw the spike up to 1974, spike back down again. And subsequently, we're still in this little run higher. If I put it onto the daily chart, you can see that run higher. It's interesting that the spike lower found support around this 1877 area, which was an old breakout area. And again, we can see that. So that is now is a basis of support that we are sort of looking at here on the gold chart, but it's back into this uptrend. It's still playing in the uptrend, still high. You've still got the positive momentum, technically speaking. Little corrections are a chance to buy on gold still. There's no real reason to think at the moment that the geopolitical risk is moving anywhere or improving. So essentially, gold is still a buy into weakness, I think. You've got the 4-hour chart with the market just starting to pick up again. Looking on the hourly, you can see a slight sort of rolling over to an extent, but still essentially near-term resistance 1920, breaking through 1920 to 1925, 26 area would again sort of generate the upside momentum on that gold chart. And finally on oil, again, another spike chart where we saw the spike up to 104.80, spike back down again to close below 100, but essentially the market is still higher, still within this uptrend, still trading with the support of this rising 21-day moving average. You've still got the positive momentum as well. What we saw previously was a slight negative divergence on this, while we're sort of breaking higher through that. So is that now sort of breaking that potential for the corrective move? We've got the 4-hour chart where the 50 level is still supportive on that RSI. You've got potentially you could use this 21 period moving average in the last couple of days being as a basis of support, but back above 100 once more this morning. It certainly looks as though oil is still remaining higher at the moment. Thank you very much for taking the time to watch this video. Our thoughts remain with the people of Ukraine at this difficult moment in their history. So I'll be back on Monday, where we'll be looking at how financial markets are continuing to react to this geopolitical situation, and I will leave you with the Infonox support and resistance table, and have a good weekend, everyone. Thank you very much.